This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, inflation fears saw emerging market stocks extending declines today for a third straight session. The emerging market tech sector recorded slightly sharper declines. But of course, the overall benchmark index fell 0.4% on the day, on track for its biggest daily drop in 2 weeks. Now, South Africa's JSE did climb slightly. Traders attribute the relative outperformance of the local market in part to better than expected financial results from some local firms. Now, also coming up on today's show. Poor nations to get a credit downgrade buffer if a just release report is adopted. Finance ministers from the group of 7 biggest economies aim at Google, Facebook in proposed tax reforms. And the apprentice tailor celebrating 50 years of having risen to dressing some of the continent's presidents. Now, a just published study suggests that poor nations could do with a credit downgrade buffer as they navigate out of the economic crisis created by the coronavirus pandemic. Well, Daniel Cash from Britain's Aston Law School and South Africa-based credit rating and analytics indicate that this could aid the countries in avoiding the risk of downgrades as they renegotiate their debt. Now, the G20 group of major economies last year unveiled a proposal designed to help governments overhaul the debt they owe to official and commercial creditors. This includes a waiver granted by private creditors that will allow credit ratings agencies to charge their sovereign rating model temporarily under a scoring system. It also involves engaging an advisory service to assist the affected nations, rating agencies, and private investors in the process. Meanwhile, finance ministers from the G7 nations are meeting in London for 2 days to reach a deal on raising more tax from multinational companies, amongst other issues. Rich nations have struggled in recent years to agree on a way to raise more tax from larger companies, which of course often book profits in jurisdictions where they pay little or no tax. While French Finance Minister Bruno Le Maire wants global tax aimed at Amazon, Google and Facebook, however, striking a deal on tax reform, which could be presented to the G20, has proved challenging. Now, in a joint letter, finance ministers from Germany, France, Spain and Italy say that they will commit to defining a common position on a new international tax system at the G7 meeting in London.
Delighted to welcome today G7 finance ministers to the UK. It's the first time we've met in person in 2 years, and I believe we can make significant progress in tackling some of the world's most pressing economic challenges. Firstly, providing support to vulnerable countries through coronavirus. Secondly, making sure that we meet our ambitions on net zero and tackling climate change. And thirdly, ensuring that the way we tax large, global, especially digital companies is fair and fit for the modern age. I'm confident we can make progress on all these fronts.
Well, let's now find out more about today's G7 meeting from Emma McCarthy. She joins us in London. Emma, good to see you again. Now, of course, all ears and eyes are on those discussions among the G7 on that global corporate tax regime going forward. There certainly seems to be some cautious optimism that the group can agree on broad outlines. What's the latest on today's discussions?
Well, good evening to you, Uche. And discussions are continuing right now. But a short time ago, German Finance Minister Olaf Scholz said that he's confident that these talks would end in an agreement on global taxation that would, quote, change the world. He's also said that he's absolutely confident that agreements will be reached today and tomorrow. Now, Scholz's comments come after French Finance Minister Bruno Le Maire said earlier that the G7 is just 1 millimetre from securing this historic tax deal. Now, as you said, rich nations have really struggled for years to agree on a way to raise more tax from large multinationals like Google, Amazon and Facebook. Now, major disagreements still remain on both the minimum rate at which companies should be taxed and on how the rules will be drawn up to ensure that large companies with lower profit margins, like Amazon, face higher taxes. The United States has proposed a minimum corporation tax of 15%, and that's above the level in countries such as Ireland, but well below the average in the G7. Le Maire said that the group is still working on the rate, which he said is very tricky.
Now, of course, we know discussions at the summit went beyond just this new tax regime. They also talked about the pandemic, health matters, access to vaccines going forward. We know South Africa's President Ramaphosa, he planned to push for certain intellectual property right provisions covering, of course, vaccines at this summit. Was there any progress on discussions to broaden global access to COVID-19 vaccines across the world?
Yeah, there was, Uche. So at the conclusion of their meeting in Oxford today, the G7 health ministers made no reference to the intellectual property rights issue, despite support for the idea from US President Joe Biden. Britain and other countries had expressed reservations about patent sharing. The ministers also didn't make any specific pledges on sharing more doses. Instead, they pledged financial support for the COVAX vaccine sharing scheme and to support the global sharing of vaccines, quote, when domestic situations permit. But what does that mean? Well, British Health Secretary Matt Hancock was very clear in comments made after the conclusion of the meeting that the UK will prioritise the vaccinations of children in the UK over donating vaccines to other countries around the world. So don't expect those doses to be making their way out of the country just yet. This is despite the British government saying that equitable access to vaccines would be at the top of the agenda at the Leaders' Summit next week, and despite the United States pledging to share 80 million vaccines this month. The World Health Organization today warned wealthy countries need to give more vaccines and is now warning of a two-track recovery from the pandemic. Uche?
Well, many thanks for that update, Emma. That, of course, is Emma McCarthy joining us there in London on the latest on those G7 talks. Meanwhile, UK and EU regulators have launched an competition investigation into Facebook, of course, which is a rare coordinated probe on a big US tech firm. The UK's Competition and Markets Authority says it is investigating whether Facebook is abusing a dominant position through its collection and use of commercial data. Now, the investigation will also seek to determine whether the link between the main Facebook social network and a Facebook marketplace is in breach of EU competition rules. Facebook also says Facebook says it will cooperate fully with both the EU and UK investigations to demonstrate that the investigations are without merit.
Today we have opened a formal antitrust investigation to assess whether Facebook has violated EU competition rules by using advertising data gathered from advertisers in order to compete with them in the markets where Facebook is active, such as classified ads. A second part of the investigation will also assess whether Facebook ties its online classified ads service, Facebook Marketplace, to its social network, so the Facebook platform we all know, and if this is in breach of EU competition rules, of course.
And now a look at other corporate headlines today. Kenya's Mombasa gas terminal has received a World Bank IFC financing facility for the construction of the first phase of a liquefied petroleum gas import and storage terminal. Now, this should enable a sustained increase in the uptake of clean energy fuels in the country. The funding was announced by the International Finance Corporation arm of the World Bank and comes after the company secured regulatory approvals. Meanwhile, Standard Bank customers in South Africa now have the ease of depositing cash while shopping for their daily essentials. In partnership with ShopRite and Pick n Pay stores nationwide, customers will be able to deposit their money in stores, removing the pressure of having to find an ATM or bank branch. Now, this gives customers the convenience of more points of representation to pay their credit cards or deposit funds into their transactional accounts. Meanwhile, Twitter is rolling out a subscription service starting in Canada and Australia that offers perks like an undo button for subscribers. The Twitter Blue subscription service will offer features that users have long asked for, but still no edit button. It includes bookmark folders for organizing saved content, an undo tweet feature that gives users 30 seconds to cancel a sent tweet before it appears, and subscribers will also get dedicated customer support. And United Airlines says it will buy ultra-fast jets from aerospace company Boom Supersonic, bringing back supersonic passenger travel, which died out with the retirement of the Anglo-French Concorde in 2003. Now, under the agreement, the airline will purchase 15 of Boom's Overture aircraft once they meet United's safety, operating, and sustainability requirements, with, of course, an option for an additional 35 aircraft. And that's a look at our corporate headlines. Well, let's now take a short break, still coming up on the show. Uganda to reduce the cost of doing business in the country. We take a look at how. And Tanzania moves to implement its $30 billion natural gas project.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home, and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Africa is the nexus of enterprise, and global business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN. Welcome back. Well, let's head to Uganda now, where President Yoweri Museveni delivered his State of the Nation address in Parliament, highlighting economic recovery programs amid the COVID-19 pandemic. Now, Museveni says he's planning to reduce the cost of doing business in the country by subsidizing power tariffs and also fighting endemic corruption in government agencies. Here's CGTN's Hilary Ayesiga with more.
A new term with a new mandate, President Yoweri Museveni has laid out his strategy to revive the economy.
Again, to remind everybody, the answers are four on the issue of the market. The internal market of Uganda, boosted by increased purchasing power, when all homesteads join the money economy by producing for the stomach, but also for producing for the pocket. Secondly, the East African market through the East African community. Thirdly, the African market through the continental free trade area. And fourthly, the global market.
Uganda is still battling the effects of the coronavirus. President Yoweri Museveni says in the next 5 years, he will be pushing to revive the country's economy, which has been hit hard by the COVID-19 pandemic. Government figures show that the country's economic growth has fallen to 3.3% from the projected 6.3% in this financial year because of coronavirus. The Ugandan president also promised to wipe out corruption in government agencies.
The cost of electricity is distorted by the mistakes committed by some of our actors without my knowledge, even when I was heading the government. Especially the mistakes of Bujagari and Umeme add 55.3% to the cost of electricity per unit.
But the legislators want the president to do more in curbing corruption.
The president has to come up and say, everybody who is going to be caught up stealing money, this is what is going to happen to him. We really cannot continue lamenting. So the president should come out open and say whether you are a general, whether you are a minister, whether you are my vice president, if you are implicated, I will dismiss you. That is more appealing.
The president also promised to fight rising crime in the country. A few days ago, there was an attempted assassination on a key government official. The president is hoping his actions will restore confidence in the business community and help the economy to bounce back. Hilary Isiga, CGTN, Kampala, Uganda.
Now, East Africa is emerging as a significant player in the continent's oil and gas industry. Large oil and gas discoveries offshore have altered perceptions of the region, transforming it into an up-and-coming destination for the extractive industry. Here's CGTN's Daniel Arab Moy taking up that story.
Oil companies are rapidly coming to terms with East Africa's potentially vast untapped oil reserves. News of fresh discoveries since 2006 has boosted onshore exploration in both Uganda and Kenya.
The potential within East Africa is massive. First, East Africa is now seen as the energy hub in Africa. And when you look at the forecast, you see everyone around the world is eager, keen, and ready to obviously consume the gas as well as the natural resources within East Africa.
Offshore, the picture is even more promising. The waters of the Indian Ocean are proving a rich hunting ground for natural gas exploration. But as the size of the region's reserves become more apparent, so does the interest of industry heavyweights.
These are massive projects. They will obviously create a lot of employment when they are happening. They'll create a lot of business for local companies when they are happening. And eventually, when they are done, then production starts and it will create a lot of revenues for the two countries of Uganda and Tanzania.
Focus is now turning on vital supporting infrastructure like pipelines and port facilities.
With dozens of wells already drilled, East Africa could soon rise to the rank of a major future oil bloc.
When you look at the world economies, they are all in need of millions and billions of what we call it barrels per day in terms of the oil and gas sector.
As recent as 2006, East Africa did not even make the list of oil producers, but that has since changed with billions of barrels already discovered within the region. Daniel Arap Moy, CGTN, Nairobi, Kenya.
Well, let's stay focused on the topic of East Africa's extractive industries. Tanzania plans to begin the construction of a delayed $30 billion liquefied natural gas project in 2023. Now, this follows the resumption of talks with companies, including Equinor. Construction is expected to take about 5 years, according to Energy Minister Medad Kalemani. Now, plans for an LNG plant on Tanzania's southern coast and a pipeline connecting offshore fields have been under consideration since 2014. Well, let's now take apart this project with Thabit Jacob. He's a researcher at the Institute for Society and Globalization at Roskilde University in Denmark. Great to have you with us on the show today, Mr. Jacob. Now, it certainly seems like projects which had previously stalled in Tanzania's extractive sectors, they're suddenly gaining momentum now under this new administration. Give us a sense of what this signals for you, especially about the changing tone between government and, of course, multinational companies looking to invest in the country.
Well, thanks for having me. Yeah, the mood is really changing on the ground. So a lot of these projects have stalled for the last 4 or 5 years, as you've said. You know, the mood under the previous government of the late President Magufuli was, there's a lot of tension and suspicion between the government and multinational companies. But President Samia Suluhu Hassan has sent a signal that she wants to move away from that anti-private sector rhetoric, a very nationalistic approach that was under the former president. And what we have seen in the last few months is that, a couple of mining projects that were pending have been approved. Negotiations again are back on track, and companies in the private sector very much feel like things are back on track again.
Now, of course, we just talked about how East Africa is becoming quite a hotspot for the extractive industries, and natural gas specifically. That has a key part to play in the global energy transition going forward. Give us some insight into how this proposed, they say it's going to be a 2-train onshore LNG plant. How will this benefit the country's mining sector and certainly boost Tanzania's economy going forward?
Yeah, right. So East Africa very much at the center of the attention as far as oil and gas resources are concerned. And of course, energy transition is a big thing now. I should point out that, your viewers might have had, stories about their global campaigns to stop financing fossil fuel, including natural gas and coal. At the same time, experts are telling us that, natural gas will play a very big role for energy transition. I mean, as far as Tanzania is concerned, gas could play a huge role in its industrialization ambition. It could play a huge role in providing reliable energy for majority of Tanzanians who are relying on mostly biogas. It also play a very important role in basically creating employment. And, this is a country that, the country's population is growing very fast. And, the natural gas economy, which is still far away because we're talking about probably 2028 onwards. So it could play a huge role in the country's energy sector, the industrialization, as I've said, which is, Tanzania has got this huge industrialization ambition, and part of that will be fueled by the natural gas economy.
Well, let's talk about the fact that Tanzania and Mozambique right now are said to be sub-Saharan Africa's foremost gas frontier investment destinations, those two nations. How key is that development in Tanzania and, of course, Mozambique as well to global LNG supply going forward?
Right. Yeah, these are two very important countries. So Mozambique has got around 180 trillion cubic feet of proven reserves of natural gas. Tanzania has got about 57 trillion cubic feet of proven natural gas. So this makes Tanzania and Mozambique Africa's two biggest holders of natural gas reserves. But I think it's a little bit premature to talk about, the role of these two countries in the global LNG supply, because as we know, the LNG project in Mozambique has stalled because of the Islamic insurgents in the northern part of Mozambique. And Tanzania, the minister was out basically saying the construction is expected to start next year and could be completed in 2028, which I doubt. It could go a little bit longer than that. And I think it's important here to point out that all of this depends very much on the global geopolitics of the LNG supply. As we speak at the moment, there are a couple of other LNG plants being constructed elsewhere in places like Qatar, in Australia, and Canada, and the US. So Mozambique and Tanzania will face competition at some point from some other top global LNG suppliers.
Quite an interesting outlook there. Well, thank you so much, Thabit Jacob, for your insights. That, of course, is Thabit Jacob. He's a researcher at the Institute of Society and Globalization at Roskilde University in Denmark. Well, let's move on now. Nigeria's ban on travelers from India, Brazil and Turkey is taking a toll on several businesses in the country. The government introduced the restrictions last month following a surge in the spread of coronavirus in these countries. Here's CGTN's Tessim Akende on that story.
Ezekiel Bok is a travel consultant for Nigerians seeking medical care in India. It's a popular destination for medical tourism among Nigerians, especially the wealthy. But since the government placed restrictions on travel, Ezekiel has been battling to stay in business.
The suspension of the flight has stopped people even making effort to travel. They won't even come for inquiry of anything, not to talk of traveling. So it has really affected us generally. Economically, there's no income for business people. And then even for the sick people, they cannot go travel for their treatment. It affects their health. It may lead to death.
Ezekiel's experience is just one of many whose businesses are affected by the travel ban. The International Air Transport Association says travel restrictions put in place to counter COVID-19 have caused major economic losses.
Nigerians trade with almost every country in the world, and especially countries like China, India, Turkey. This ban, especially for India and Turkey particularly, it will have very grave effects on us as individuals.
The pandemic has put pressure on Nigeria's economy. The World Bank attributes 42% of overall job losses in Nigeria between 2020 and 2021 to the outbreak of the coronavirus disease in the country. The government says it has earmarked nearly $200 million to support businesses impacted by the coronavirus disease. The Trade and Investment Ministry says close to 1 million people are expected to benefit from the credit support. Economic analysts say that doesn't go far enough.
The government needs to give further incentive to local businesses that can replicate the kind of goods and services we get from outside the country, especially these countries where the ban has been placed, and try to encourage them. If we cannot give them additional resources.
Ezekiel hopes he will be able to obtain a grant from the government. He says that will help him remain in business. Until then, uncertainty hangs over him. Tessim Akende, CGTN Jos, Nigeria.
Well, you're watching Global Business Africa. Let's take a short break now, but still coming up. We take apart the task of regulating cryptocurrencies in Africa and why corporate organizations must start factoring climate change as a risk to their bottom line.
This has taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Over the last 14 hours of rain.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are these stories that need to be told. Africa Live. Find your voice.
I try to not let it affect me, but there are days when it does. I'm a human being, and to see patients in a hospital bed and their family members are not there, there's no one there to hold their hand, that human touch, you know?
I just hope everyone can remember that the situation is not permanent and that everything will get better eventually.
And now here's a quick recap of other headlines this hour. France says it is suspending its joint military operations with Malian troops. The move is part of efforts to pressure Mali's military junta into restoring a civilian-led government. Now, France's Ministry of Armed Forces says French soldiers will continue operating independently in Mali. Former Vice President Colonel Assimi Goïta, who led last week's revolt, was declared president last Friday. And South African Health Minister Zweli Mkhize is considering resigning over an investigation into a tendering scandal. Now, the minister, who is considered a possible successor to President Cyril Ramaphosa, is under scrutiny over an $11 million government contract to help communicate the national response to the coronavirus pandemic. And Tunisian officials say at least 20 migrants remain missing a day after two Europe-bound boats sank off the coast of the North African state. Two bodies have so far been recovered, while some 109 people were rescued. Most of the migrants were from sub-Saharan Africa. And finally, although COVID deaths in Africa account for less than 3% of the global total, a new report warns the continent has not been spared from the spillover effects of the pandemic. Growing violence and higher unemployment rates have emerged as major challenges. The 2021 Ibrahim Forum report shows that the global economic shutdown has driven Africa into recession for the first time in 30 years. And that's a recap of today's top headlines. Now, South Africa's central bank has commissioned a feasibility study on making a digital currency part of its mandate and policy. The bank says it wants to test the desirability and appropriateness of a central bank digital currency as an alternative tender to complement cash for general purpose retail use. Here's Sumitra Naidu with more on that.
South Africa is joining a growing number of central banks in both emerging and developed countries who are looking into the feasibility of offering digital currencies directly to customers.
90% of central banks around the world are currently looking into this. The reason for the central banks doing these is as a direct response to many things that's happened in the financial world. First of all, unprecedented times we're moving into in terms of monetary policy and fiscal policy around the world. And as well as financial technologies that really came out of the blue and is taking over.
Central banks don't deal with customers directly, but a central bank digital currency would mean a new relationship. A CBDC is a form of electronic cash linked to a sovereign currency, protected by monetary policy and inflation targeting. While the central bank isn't ready to introduce a digital currency just yet, some experts believe they should.
The central banks need to look out of the box and stay relevant in times where there's things like cryptocurrencies and Bitcoin and lots of fintech solutions that's seeing the light these days, taking over many of the functions that central bank used to do.
If you are a central banker or an entity or person close to central bank, then I think it's positive because it's a much more efficient form of transaction in terms of be the efficiency of cost, etc., and also has greater implications, in my view, for monetary policy and how they can be implemented.
Despite concerns over end-user access by the central bank, a move towards a digital currency is seen as inevitable as South Africa seeks to keep up with global financial trends. But the SARB's announcement is clear that the current process is no more than a study which will be complete next year.
You can reach a much larger audience. You can bank people that's never been able to get a bank account for whatever reason. And we know that there's billions and billions of adults around the world that are not banked. It removes lots of barriers to entry to them because actually connectivity in itself is not really a barrier.
Some countries envisage a cashless system, but experts warn of risks on privacy. CBDC can also open up consumers' finances to the effects of monetary policy decisions directly. There's also risks to commercial banks' liquidity. Sumitra Nadu, CGTN, Johannesburg, South Africa.
Meanwhile, in Ghana, pressure is mounting on the government to regulate cryptocurrency trading that is currently deemed illegal by its central bank. Now, the bank is warning people to stop trading in digital currencies altogether, but the trend still continues. Here's CGTN's Nabil Ahmed Rufai reporting from Accra.
Nick Owusu has been trading in cryptocurrency for 6 years.
Your bank account, as it were, in Bitcoin.
He uses the digital currency for transactions such as money transfers and investments online.
This is a type of currency whose price at any point in time is determined by the forces of demand and supply. So if the demand for Bitcoin goes up, the value also goes up. If the demand for Bitcoin reduces, the value goes down.
There is a growing trend among Ghanaians trading in cryptocurrency due to the high return on investments. But the central bank says it is illegal because it is not regulated.
When you have a currency whose value is so unstable, really, you really cannot use it effectively to meet any of the standard functions of money. And this is why I think there's a lot more emphasis on looking at digital money, which is backed by the state, backed by the central banks.
Last year, cryptocurrency transfers to and from Africa reached more than $300 million, with Nigeria, South Africa, and Kenya doing most of the transactions. Owusu says Ghana can also take advantage as the popularity of cryptocurrency trade grows.
By looking at the series of this transaction, you are able to bring in a lot of people who are unbanked in the country. And once you can find a way to regulate these activities, it provides an avenue for revenue generation for the state.
Still, there are concerns about people using cryptocurrency for fraudulent activities such as money laundering. Ghana's central bank has warned people not to trade with cryptocurrencies for now. It says it is in the process of introducing a digital currency which will be safer to use for trading than Bitcoin. Analysts, however, do not want the central bank to rule out trading in cryptocurrency entirely, but rather find ways of regulating it.
The time has come for the regulator, which is the Bank of Ghana, to bring in experts. We can secure the services of experts from Europe, America, Israel to come in and then build the capacity of some people who are into financial technology to take it up. So those people can engage as players and also engage as help the regulator also manage the activities of crypto in Ghana.
Nick Owusu agrees. He says trading in cryptocurrency will continue to happen despite the warnings against it. He strongly believes if it is regulated, Ghana's economy will benefit. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
Now, of course, many central banks across Africa have expressed interest in setting up digital currencies, including Nigeria. Many are reportedly in advanced stages of introducing digital currencies going forward. Let's find out more from Dr. Olalekan Aworinde. He's the head of the Department of Economics at the Pan-Atlantic University in Lagos. Great to have you with us on the show today, sir. Now, of course, as we mentioned, across Africa, central banks are either at the research phase, others are on the path to a pilot or implementation stage when it comes to digital currencies. Give us some insight into the progress you've seen so far. Paint us a picture in terms of Africa's progress regarding central bank digital currencies.
Thank you very much for having me. What is digital currency? Digital currency is an electronic currency. So that implies that it is not a physical currency, just like our notes and our coins. And if you look at it critically, figures have it that countries like South Africa, Kenya, as well as Nigeria are one of the 10 top users of cryptocurrency worldwide. Actually, there are some countries in Africa, so to say, like Nigeria, for example, they have made a very bold statement that they are banning the use of cryptocurrency. Countries like Kenya, for example, is neither receptive or prohibiting the use of cryptocurrency. And South Africa has not come out clearly about the policies on cryptocurrency. But presently, they have set up a cryptocurrency working committee group to look into the workings of cryptocurrency in the economy. This is not also limited to those three countries in terms of the users of the cryptocurrency. We also have countries like Libya, Egypt, Mozambique, Morocco, and Algeria. They have also made a very bold statement about the use that they are banning cryptocurrency. Okay, and one begin to wonder why the increased use of cryptocurrency. One of the reasons why there are increase in the use of cryptocurrency in African countries is largely based on the low transaction cost. And aside from the issue of low transaction cost is also the issue of there is no intermediaries. And aside from the issue of intermediaries in this case, is that the transaction is always very easy and quick to complete. And so these are some of the reasons why we felt that in Africa, a lot of people are making use of this cryptocurrency. And so to say, countries in Africa, and particularly the central bankers of African countries, they have been trying to make some bold statements so as to protect the financial stability of their countries.
Now, it is quite interesting because central banks across Africa, they've been the skeptics when it comes to digital currency and more of a repressive force. For example, take Nigeria. Despite recently committing to creating a digital currency, we know the central bank there, like many across Africa, they've taken a major step to shield the financial sector by restricting banks from interacting with cryptocurrency firms. They've really wanted to regulate that sector. Do you think once they take up digital currencies, we'll see a change in tone or clearer regulation towards cryptocurrencies soon?
Well, I'm just of the opinion that they are not going to change the narrative. They're likely going to come up with a very clear term about policies for cryptocurrency. And if you look at it very well, Nigeria, for example, in February 5th this year, 2021, they made a very bold statement that all financial institutions should close all account holders that are using this digital currency in terms of the cryptocurrency. Okay, now why do they have to do that? They have to do that because of the bubble. Because if care is not taken, the bubble can burst. And what do I mean that the bubble can burst at any particular time? These instruments are very volatile. And for any instrument that is very volatile, it always comes with a very high returns. And at the end of the day, if anything, if there's any adverse shocks in the economy, the implication is that the price of that particular instrument is likely going to fall. And so when the bubble bursts, everybody is likely going to suffer for this. Aside from the issue of the volatility of this instrument, it's also because of the fraudulent nature of these transactions. If you remember, the CBN of Nigeria clamped down on the users of cryptocurrency in Nigeria because they are of the opinion that majority of the transactions they are illegal. And so in an attempt to cover or in an attempt to avert all these scams, okay, so they now come up with the policy of saying, okay, we don't want anything that we cannot regulate. And even aside from that, another concern is the issue of the regulatory concerns. The regulators are afraid because of the economic risk that is involved in this case. And that's the reason why it is imperative at this time for them to make a very bold statement so as to avert any systemic banking crisis. I'm very sure and I'm very, very hopeful because majority of the transactions that go through this digital currency or cryptocurrency or Bitcoin, so to say, they are very heavy. And as a result of that, if care is not taken, it's likely going to lead to a systemic banking crisis in African countries. And Nigeria is not an exception.
Right. Well, we do have to leave it there, Dr. Aworinde. Thank you so much for that insightful discussion. That, of course, is Dr. Olalekan Aworinde. He is from Lagos's Pan-Atlantic University School of Economics. Well, let's move on now. Environmentalists have spent decades warning about the potentially irreversible impact of climate change. But for the financial world, anticipating the impact of global warming on the bottom line is a relatively new trend. But that is changing now. Some of the world's leading central banks and financial institutions are hoping to leverage this growing concern to put the biggest companies on the hook for protecting the environment. Here's CGTN's Owen Fairclough with more.
Bankers are calling it a green swan, a seismic environmental catastrophe on the scale of the 2008 collapse of investment bank Lehman Brothers, whose domino effect almost took down the global financial system. And if those bankers' watchdogs were caught out by that disaster, they're determined to avoid déjà vu over climate change.
The best science today says that it is an event that is certain to happen if we don't act. Climate change is not a very rare, distant tail of the distribution probability. I'm sure you've seen increasingly more frequent extreme weather events. And COVID-19 has links with climate and the loss of biodiversity. Then we are running out of time.
The Bank for International Settlements is now hoping to integrate climate change risks into the global financial system.
One idea is to create a global standard forcing companies who are traded publicly on stock markets to disclose their climate risks. That would hit their bottom line if, for example, investors decide that those risks represent a bad investment. And it's potentially very significant for insurance companies facing huge bills for more severe and more regular weather-related disasters.
US President Joe Biden is on board, as is the world's largest asset manager, BlackRock. The BIS wants to present a global standard on climate risk at the next United Nations summit in the Scottish city of Glasgow this November. But amid concerns about COVID-19 vaccine shortages, just getting delegates around the table safely may prove to be the most immediate challenge. Owen Fairclough, CGTN, Washington.
And on that note, let's take a look at commodity markets today. Oil prices rising towards $72 a barrel. They were trading close to a two-year high as OPEC plus supply discipline and, of course, recovering demand did counter those concerns about patchy COVID-19 vaccination rollouts around the world. Gold prices slipping to a more than two-week low. They were weighed down by a stronger dollar and then, of course, an uptick in bond yields after upbeat U.S. economic data did help to boost bets over possible tapering of stimulus measures by the US Fed. Well, let's take a quick break now. Still coming up on the show. We look at the Ivorian Burkinabe designer who chanced on a career that has made him a fashion icon on the continent.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN. See the difference.
Now, Kenya's standard gauge railway has continued to enhance movement of cargo between the coastal city of Mombasa and Nairobi, and the capital of Nairobi. It's certainly helping to boost the country's economic output going forward. The Chinese constructed railway line is seen to have awakened a mode of transport that had collapsed many years ago. Here's CGTN's Enoch Collier reporting.
This locomotive engine has transported freight across Kenya's heartland for over 3 years now. We found it arriving at the Nairobi terminus headed for the inland container depot. Pasture for this Chinese-built workhorse is increasing each year as many transporters shift to the rail. It had been scheduled to transport cargo from Nairobi to the port of Mombasa. At the Nairobi ICD, a crew of crane drivers, line managers and record keepers will be loading wagons with containers ready to be moved to the coast.
This is the platform where the loading and unloading of cargo onto wagons happens. Now, according to Afrista, the company that runs the SGR, cargo transportation by rail increased significantly in the last 1 year.
They believe that rail transport will once again become the backbone of Kenya's transport industry. At the center of this re-emerging transport giant sits Nairobi Terminus, the biggest rail terminal in Kenya. Slightly over 682 tons of cargo passes through this railway station every month. Those carrying goods destined for Nairobi and towns close by drop them here at the inland container depot. Titus Kiprop leads a team of men and women who maintain the railway line, its signals and the workshop. He says he has proudly seen the number of trains and cargo delivered on rail grow through the years.
The reason is because it's more cheaper, it's more efficient.
In Mombasa, this train is headed for the port. It's carrying export containers and some empty. It will return to Nairobi ferrying imports destined for the capital city and other parts of Kenya and neighboring countries like Ethiopia, South Sudan and Uganda. For several decades, transportation of cargo from the coastal city of Mombasa to other parts of the East and Central Africa region has been on road. But with rail transport gaining momentum in Kenya, transporters are slowly moving from the road to the rail.
Just between the period that the SGR was opened for operation up to now, I've seen a huge growth in terms of cargo movement.
To understand why, you have to look at the numbers. It cost an average of $510 to move a 20-foot container from Nairobi to Naivasha and $725 for a 40-foot type. From the inland container depot or the Naivasha container depot, trucks take over. Of course, trucks can go anywhere, while trains only move to places where there is a rail. Now, the Kenyan government is reviving the colonial meter gauge railway and the Kisumu port that had collapsed 2 decades ago. They are expected to enhance transportation of cargo from Mombasa to other parts of Kenya and into the neighboring countries like Uganda and vice versa.
By moving our tea and coffee through this line at greatly reduced costs, the result is extra shillings in the pockets of our hard-working farmers.
In February this year, Afrista, the company that runs the SGR, announced that the movement of containers on the railway line from the port of Mombasa had increased by nearly half. At that time, SGR had moved over 186 cargo trains. Enoch Sikolia, CGTN, Mombasa, Kenya.
Now, Ivorian Burkinabe fashion designer Pate Ouedraogo left his village in Burkina Faso in 1969 after his slender frame ruled him out of working in Côte d'Ivoire's cocoa sector. But a chance decision to become an apprentice tailor has seen him rise to the heights of the global fashion industry. Now, Pateo has made a career out of dressing presidents, global icons, and promoting African fashion around the continent.
Pateo is celebrating a career spanning 5 decades that has seen his uniquely colorful shirts and dresses become must-haves for Africa's most famous leaders and celebrities.
President Mandela wore Pateo in Paris, and a journalist asked him a question about the shirt because it was the first president who wore a multicolored shirt like that.
His fast break came in 1994 when South African singer Miriam Makeba bought 4 of his shirts as a gift for former President Nelson Mandela. The mention of his name led to newspaper headlines and widespread intrigue, sparking a rush of orders and sales almost overnight. He even met Mandela in 1998, an encounter which further boosted his career.
It was a meeting that changed my life because I never imagined. At the village, we would hear about Mandela and apartheid and all the rest. I never thought I'd be a tailor, even less dress him. And when you're in front of him, I assure you, it's extraordinary.
He also met and designed clothes for Rwandan President Paul Kagame, former Nigerian President Olusegun Obasanjo, Côte d'Ivoire's President Alassane Ouattara, and Nigerian billionaire Aliko Dangote. But the challenge lies in expanding preference for African fashion amongst Africa's everyday people.
We have not yet conquered the African market because Africans themselves are still adverse to wearing what is made in Africa. That's the real problem. Don't you think that fashion could be part of the riches of Africa? We are a producer of the best cotton in the world. But when it leaves, it is the crusts that come back to us. Why are we not capable? There are so many smart people, so many brave people in Africa. Why can't we grow from fashion?
Pateo believes the key to showing Africans the value of their style is to open up their eyes to the various development opportunities that fashion has to offer.
Today, when you go on Google and type African fashion, right away, Pateo is the first name that comes up. There was Christ Saido before, but unfortunately, Christ left too early. Soon, there was Alpha Dai and Pateo. I think he is one of the greatest.
Pateo maintains a sense of humility as he celebrates his anniversary show with bright fireworks blossomed from creative works showcased in international catwalks. Beryl Oro, CGTN.
And as usual, before we leave you today, here's a quick look at Africa's currencies. Now, South Africa's rand was weaker today, remaining on the back foot against the recovering US dollar. That's after upbeat US weekly jobs data brought back some of those bets of high lending rates by the US Fed. Now, the rand did rally more than 1% this week. It gained close to 9% against the dollar this year so far, making it the best performing currency in 2021 against the dollar. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.